Thursday, June 7th, 2018, Monaco 64, home of alternative economics and contrarian views. So the markets continue to move irrationally through time. There's a note saying that the markets can remain irrational for longer than it can remain solvent. I think that was John Maynard Keynes, the father of Keynesian economics, and I think that was the most sensible thing he ever said. His economics, in my opinion, are not sensible. But I want to talk about silver today. And I'm not the first one to say this, and people have been saying it for the last few years. But I have to say silver is, in my opinion, the most undervalued asset right now. And I'll show you why. I'll look at some charts. I did a live stream yesterday, really interesting. Yes, the markets have been heavily manipulated by the powers that be, but I don't think they can control everything forever, unless we're gonna go into a, I don't know, completely Orwellian world, which maybe we will, but I always hope for the best. So we're going to look at the markets as usual this morning, and then I'm going to look at some charts. I'm going to look at the gold silver ratio, the dollar index, and some charts of the Dow, silver, and gold, and tell you why I think silver is a screaming buy. Does that mean you have to abandon all your gold? No, not really. What about being in the stock market? Well, I wouldn't be in the stock market personally. I think it's, yeah, we could see a melt up, but if the currency collapses and we get hyperinflation, I'd rather have some real assets. Maybe by having stock shares of real companies that build real things could be good, but with all the talk of counterparty risk as well, and whether the DTCC actually holds your stock certificates, I'm not even sure about that. So I want to be out of the system. I think the system right now is like an airplane flying really high, and the pilots, the people in charge, all their control panel, it's all fake. They're trying to keep people from panicking. You know, everything's fine, just relax, sit back, have your lunch or dinner, watch a movie, and then out of the blue everything just, you know, implodes. So I don't want to be on that plane, and I want to be out of that plane. It's been too manipulated. How have they done that? Well, with the data, with the interference in the markets through money printing, it's all a fake. And I don't want to be, how can I say, exposed to that. And that's why gold and silver and even cryptocurrencies outside the system, in my opinion, are safer. Or, yeah, that's it. So let's look at the markets this morning, see what they're doing. Looks like the melt up is continuing. It's 9:06 a.m. London. Gold is up $2. $12.9660. The range has been $12.95 to $12.99. So there's still, not going down, but not going up either. So flatlining at the moment. Silver up $4 at 4 cents at 1671. Range has been 1663, 1674. Outperformed gold quite a bit yesterday, and we'll look at the charts in a minute. The Dow is up 70. We closed above 25,000, which was a key Fibonacci level. 50% retracement of the high this year and the low this year. Right now we're up 70 at 25,207. S&P is up 4 points at 2775, and the Nasdaq 100 futures is up 10. Currency-wise, the pound continued to trade up. So is the euro. I also want to look at the dollar index. It looks like we're topping. So the pound is up 1/3% at 134.60. Euro is at 118.20. So up almost 0.5%, and the dollar's down 0.25% against the yen, 109.87. So dollar starting to, is the rally, the correction up and the dollar finished? Because I don't think we're in a bull market in the dollar. I think we topped about 18 months ago. So we'll have a look at that as well. So yeah, let's start with the dollar then, quickly. Here's the chart of the dollar index going back to the top in the beginning of January last year. I think it was around 103, let's see, 82. So it went pretty much on a straight line. Of course, markets, go up and down all the way till February this year, down to 88.25. So that was a big drop. So the dollar was due for a correction. It kind of flatlined there for from the middle of February till the middle of April, and then it started going up, and it's been going up since, squeezing a lot of the emerging market countries. A lot of talk of the dollar continuing to go higher and creating a crisis, but as you can see now, it's already turning. All the talk about the strong dollar, and it looks like we've formed a double top. If you look at the high last year, in the beginning of November, and the high that we had on the 29th of May. So now we've broken that trend line, and it looks like we're going back down in the dollar index. So that's what I wanted to show you. And before I go into the gold silver ratio, I'll just show you a chart of the Dow to look back, and not to, like a lot of people, you just listen to the mainstream media, Dow doing this, doing that. But I think we need to look back, and see, would you really want to buy something that has moved like this? So this is a chart going back to 1998, and here's the Dow. This is where we are. Is that a really good place to buy stocks? I don't think so. So that's just all I wanted to show you about the Dow, this chart. Let's look at the silver chart. That's the other one I wanted to show you, compared to the Dow. And this is going back also 20 years, and it's a monthly chart. What would you rather buy, the Dow or silver? You tell me. With all the money printing we've had, with historical, how can I say, tradition of silver being money, and I know it's industrial commodity as well. Even more reason why it shouldn't be here. I know a lot of you will say, oh, silver is not money anymore. I don't believe it. So I think it will continue to be money. So that's where silver is. And you saw where the Dow was. Picture there. Tell 1,000 words, as they say. So now what are we going to look at now? Well, let's look at a gold chart before I go to the important one, the gold silver ratio. So spot gold, this is also a monthly chart, and it's outperformed silver, of course. And some might argue, well, we're gonna collapse, but I don't think so. I think the top was made 2011. We've had a bottom end of 2015. And it's just ready to move. Now the important chart, the gold-silver ratio. And I'll bring up here, this is a daily chart. Let's see, going back to 2015. So it's a 3-year chart. And I've drawn some trend lines here. You can see we've broken those trend lines. I've also drawn another trend line there. That's the head and shoulder top. We've broken the neckline. So this ratio looks like it's going to move lower here. And what does that mean? Well, it means that silver is going to continue to outperform gold. And historically, that is bullish for precious metals. And I'll show you why in the next chart, which is the same chart, but it's a monthly one going back just over 20 years, I think, 1997. So if we go back to 2003 here, where we got this top around 80, and then the bottom in 2006, and there's another kind of higher bottom in 2008, you can see that that ratio dropped from around 80 to 50. That's when gold had its first big move from, you know, the low that was around 250 earlier in the century to 1,000 in I think it was March. Was it March 2018? So, and then you had the financial crisis of 08 and the Lehman collapse, and then we had a correction in the precious metals, and we went back up to around 80 again, and that was towards the end of 2008, so it wasn't long-lived. And then again that ratio collapsed from 80 to a low of like 32 almost, and that's when gold went from just below 700 to 1920. And ever since then we've had a correction in the precious metals, and it's been very frustrating. So you've had a top in 2016, just in the beginning of 2016, as the precious metals were bottoming. It was around 83, so a pretty high ratio. That meant gold was outperforming silver a lot, and it usually means there's a correction. And then that ratio dropped again, and that's when we reached 1375 in gold and around 21 in silver in 2016 in the summer. I think it was July, and then we dropped to like 66, and ever since then it's been frustrating again. And we've you know, recently we've been as high as 82, and now it's starting to move again. So all I'm trying to say, you need to be patient, because I think we are just about to move a lot lower in that ratio. You've seen the daily chart, now you've seen the monthly chart, and you've seen what can happen when that ratio starts moving sharply lower. So that's what I wanted to say. The way to play this, of course, as a trade or as an investor, even as of protecting yourself, if you are going to go into precious metals, if you're thinking of buying gold and silver, maybe lean more towards silver. Even though gold is going to do well as well. And it depends on the amount you're going to buy. If you're a multi-millionaire, it's easier to buy gold, of course. Silver is very bulky. So you have to think of those things. So that's it for now. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can follow me also on DTube, on Steemit, and on Twitter. And I'll talk to you later. Take care. Bye.